Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 2, Debtors. In Chapter 1, the focus was on cash transactions only. And then we looked at selling goods for cash. So now when we're looking at debtors, it means selling goods on credit. And when we're selling goods on credit, it means that those people who owes us money are called debtors. So that's going to be the focus in this chapter. The first activity. The following information was extracted from the accounting records of One Stop Traders. Required: complete the debtors journal of One Stop Traders for May 2024. Post to the debtors ledger and the general ledger. Compile a debtors list and show the effect on the accounting equation for the transactions on 3 May 2024. So before we start with the activity now, just a reminder and refer back to the theory booklet. When we look at the debtors ledger, it's an individual record of each one of our debtors. And then at the end, after we've completed all the transactions at the end of the month, we compile a debtors list that shows all the outstanding balances. The general ledger is a summary of all my journals. So at the end of the month, we post the totals to the general ledger. And if we've done this whole process correctly by taking it to the individual's account and taking it to the general ledger, it must be the debtors control balance must be the same as the balance in the debtors list. Otherwise, somewhere you've made a mistake. So we start with the first entry, transactions for May 2024. On day 3, sold merchandise on credit to P. Boyson for $850, invoice $45, and the cost was $425. So when we're selling goods on credit, the source document applicable is invoice. The customer will get the original, the business keeps the duplicate, and that's why we indicate duplicate invoice. This is the only source document that will ever appear in the debtors journal, so we can only write it once, and then we start with the number. The number that was issued was number 45, and the business keeps the duplicate. This happened on day 3. Name of debtor, P. Boyson. For how much? $850, and the cost is $425. Now in folio, we need to indicate that we are going to post this transaction to the individual's account, and that debtor is debtor number 1. That's why we've got debtors ledger. Then the second transaction, I can automatically fill in the next number, which is 46. They don't even need to tell you that, because we issue the invoices, it will be in numeric order. The business keeps the duplicate. So day 8 says supplied goods on credit to Grobler, together with invoice 46, 1,300. The cost, 650. This happened on day 8. Who purchased from us? A Grobler. We're going to take it to his debtors ledger, number 2. The selling price goes into sales, 1,300, and the cost in cost of sales, 650. Day 17. Delivered goods on credit to F. Rabi for 784. The cost was 392. Source document number 47. Day 17. Who purchased from us? Who owes us money? F. Rabi. We're going to take it to his individual account, which is debtor ledger number 3. The selling price goes into sales, 784, and the cost goes into cost of sales, 392. On day 29, sold 2,690 worth of goods on account to P. Boyson, invoice issued, and the cost 1,345. The next source document number is number 48. Again, they don't need to tell you this. You should know, you should study this. When we're selling goods on credit, the source document will always be duplicate invoice. And the next number is number 48. This happened on day 29. Who purchased from us on credit? P. Boyson. And now this needs to be taken to his individual account. And if you take note, this is debtors ledger number 1. So it's the second purchase from Boyson. The selling price goes into sales, 2,690, and the cost into cost of sales, 1,345. At the end of the month, we just have to total this. So take sales and add everything. Take cost of sales and add everything. Next, the debtors ledger of one-stop traders. So the first debtor is P. Boyson's. So just take note of the following. I can look at the transactions again without doing the journals. We can post it directly into the individual's personal account. Or we can use the journal that we've just completed and we have to take it to their account. There were no opening balances, so we start with the first debtor, P. Boyson. And as mentioned earlier, this debtor purchased from us twice. So this must be in date order. You cannot start with day 29 and then enter day 3. It must be in date order. So if we look at the debtors ledger, date, always start with the month in which we are busy with. We are busy with May 2024. The first transaction happened on day 3. Code is what you as a business assign for each transaction. When we are selling goods, we are going to number it number 1. Now, very important. This is the ledger of P. Boyson. So we can't write details P. Boyson. When we talk about details, we talk about what was the source document as evidence of this transaction that took place. And that would be invoice number 45. Which journal did we get the information from? From the debtors journal number 5. Very important now as well. When we're talking about debtors, it means it's regarded as a current asset. Debit means plus and credit means minus. So this will be entered on the debit side because this person is going to owe us more money. And after each day, we calculate the new balance. After each transaction, after each entry, the new balance is calculated. The second transaction happened on day 29, code number 01. The source document was invoice number 48 from the debtors journal number 5. And again, what will happen now? From the debtors journal, they owe us more money. On the debit side, 2,690. And now we calculate the new balance. We have to take 850 plus 2,690. And that is the amount which is owed. Next, we've got Grobler. There was only one transaction that took place this month. Grobler on day 8. We start with the month, May 2024, day 8, code number 1, invoice 46 from the debtors journal, debit 1,300, so the balance is 1,300. The last transaction that we need to enter is F. Rabi. So F. Rabi, transaction took place May 2024, day 17, code 01, invoice number 47 from the debtors journal, debit 784 and the balance 784. Now that we've taken everything from the debtors journal and we've posted to the individual's account, The next step is to compile the debtors list. And to compile the debtors list, we're simply going to write the balances at the end. Please take note, I am not going to total anything, especially look at Boyson. That 3,540 is the final balance. So don't take 850 plus that. Then you're going to get it completely wrong. Once we've taken all the end balances, we can total it, and that is actually the total outstanding debt, the balance of the debtors control. Posting to the general ledger. Take note, there's only 2 money columns. So, sales always represents the selling price. Cost of sales, the cost. If you see the word cost of sales, you should know that the meaning of that word is the cost of goods, trading stock, which was sold. So their BFF, their best friend forever, is the trading stock account. When we look at sales, it means that was our income. And if we're selling on credit, we sold the goods to a debtor. So therefore, sales and debtors control goes together. This is very important to remember. So we start with the first one. Because this is a money column, this must happen at the end of the month, the last day of the month. So even if the date says the 29th, what is the last day of the month when we look at May? And the first that we're going to take is we're going to look at trading stock. Trading stock is an asset plus on the debit minus on the credit. So when we are selling trading stock, it means that our assets will decrease. We are busy with May 2024 on day 31. Now, the contra account, that is your details, is cost of sales from the debtors journal 2,812. Now you can actually apply the double entry principle, which means for every credit, there's a debit. That means that cost of sales is going to be debited. When? The last day of the month. And what is the contra account? Trading stock from the debtors journal number 5 and amount 2,812. Can you see that we've applied the double entry principle? And secondly, our expense is going to increase if goods are sold on credit because there's a cost involved. Our end goal is we want to know how much profit did we make from selling these goods. So the only way to know the profit that we've made is by taking your sales minus your cost of sales. Debtors control is regarded as a current asset, which means the more goods are sold on credit, the more money is owed to us. Therefore, our assets will increase. On the debit side, May 2024, the last day of the month, which is the 31st, and now the contra account is sales. Debtors controlled increase because of goods that were sold on credit. Now we apply the double entry principle. For every debit, there's a credit. And secondly, our income is going to increase because of credit sales. That's why the contra account is debtors control. And the amount, 5,624. Right. Now, to complete the accounting equation, we apply the same principle we've just applied in our general ledger. And that is that we've got the selling price which goes into sales. We've got the cost that goes into cost of sales. If you see sales and goods were sold on credit, it means that debtors control is involved. Whenever you see the word cost of sales, it means the cost of goods that were sold, and goods refers to trading stock. Then trading stock is involved. So if you look at this transaction that we now need to complete on the accounting equation, the selling price goes into debtors control and sales, just like we've done in the general ledger. It means we start with this, the transaction, on which day did it happen, account debited, debtors control, account credited, sales. Debtors is regarded as an asset, that's why it's plus, and owner's equity. The fact that my income increase will have a positive effect on my owner's equity. Very important to take note. If the accounting equation said to you, you needed to indicate the subsidiary ledger or journal. The ledger. It means that you need to not only write debtors control, but also the name of the debtor. So just keep that in mind, the different ways in which it can be asked. To show the cost, it means that the cost price must go into trading stock and cost of sales. We often mix this up and we want to put the sales amount into cost of sales as well. Cost of sales means the cost of the goods that were sold. So if we take this now and we look at what will happen if we're selling goods, trading stock, our assets will decrease on the credit side. If it's easier for you to start with cost of sales, think about it. Cost of sales is an expense which will be debited when goods are sold on credit. So cost of sales debited, trading stock credited. Cost of sales is regarded as an expense which will now have a negative effect on the owner's equity. Nothing happened with your liabilities. I hope that you have a better understanding with regards to the debtors journal. The only focus in this activity was credit sales transactions. Thank you very much. I want to leave you with this quote. If you're not willing to learn, no one can help you. If you're determined to learn, no one can stop you. Have a wonderful day.